Without further ado, I'd like to start first with Agrima from India. If you're here, hi, well done. Namaste to India. It's the afternoon where you are. Yeah, Agrima, I think I'd like to give you the opportunity to quickly introduce yourself and then also tell us a bit about what you're working on, and especially interesting, as we discussed, the fact that your work is also involving some financial inclusion in your country. Please tell us a bit about that.
Sure. Hello, everyone. I'm Agrima. I'm a London Business School alumni, and currently I'm working at an AI-based verification and onboarding startup called inVOID as the business head. So today I would like to talk to you all about digital onboarding solutions in India, the digital lending landscape, and the changing face of lending in India. We would also like to, I think, address how regulatory policies in India have recently changed and have acted as major enablers in helping companies to expand. So, all businesses are embracing digital solutions these days to combat uncertainties by changing business and economic conditions. As a consequence, the demand for digital onboarding and remote verifications has seen a drastic increase. So here is where our company inVOID comes into play. Even traditional banks are now opting for video KYC and digital KYC solutions and taking the digital plunge so that they do not fall behind on the curve and take the least time to change their business operations when faced with uncertainties. As physical onboarding is close to impossible now, going digital is no more the option, it is the default. So what we do at inVOID is that we are an end-to-end user verification, KYC, and authentication system. So we enable companies to onboard and verify their users remotely, just in like a two-step process using our digital KYC flow. Recently, RBI has come up with a revolutionary move allowing companies to onboard users remotely through a video call called the Video KYC solution. So RBI came up with this move on January 9th, 2020, and the pandemic hit India in March. So this actually showed us that going digital is the only way to survive and to adapt in such situations. So our solution is supported by cutting-edge technology. The verification process connects many stakeholders on real-time basis, eliminating the need to give paper-based evidence of residence of proof along with any photo identity. The earlier process followed by banks was very lengthy, cumbersome. It took somewhere around weeks and days to complete. And it was also extremely tedious. Our solution enables companies and customers to complete their KYC within seconds using the digital KYC process, and sometimes within minutes if they opt for the video KYC solution. Introduction of this video-based authentication has significantly enhanced the customer experience, reduced user drop-offs, and cut costs for companies by more than 90%. So as you know that India is one of the countries who has adopted fintech, like the fintech adoption rate here is extremely high. In fact, the average percentage of fintech users in 2018 in India was 57.9%, which was the second highest globally. The Indian payment landscape, lending, onboarding have experienced drastic change in the last 3 to 5 years. And all this together builds up the case for adoption and growth of credit seeking via fintechs. Introduction and adoption of UPI, digital lending apps, marketplace, payment gateways in India has increased our chances and increased the adoption drastically. Digitalization allows these customers to register on an online lending platform from their smartphones. The mobile penetration has increased so much that it has even reached Tier 2 and Tier 3 cities. Digital credit lending apps, AI-based credit scoring, digital onboarding has all enabled users to basically access credit at a lower rate. These fintech companies in India have experienced huge regulatory changes. For example, the one that I talked about before, the video KYC solution. Also, it is a major reason for financial inclusion. So even if I talk about women, the women entrepreneur segment is a very attractive one, but it is an underbanked and unbanked sector in India. There are many issues related to application process, turnaround time, unconscious bias of bankers against women, which pose as challenges for them, and also their poor financial literacy and their lack of formal work experience. To tackle this, fintech has actually come into play. They have drastically reduced operating costs and improved transparencies. Not only this, they have enabled women to know the status of their application at each point. Fintechs have come into play in India even more as they have improved the customer experience and reduced processing time for working capital loans. So in India, what happens is that a lot of women are burdened and weighed down by their family responsibilities. So it is extremely benefit for them to get instant loans. Also, many women entrepreneurs produce goods that are very seasonal in their demand. For example, during festivals. So they require quick financing at times. So this is where even another initiative by the government came into play, which was the UPI payment system, that is the Unified Payment Interface. Digital financial services could save money for businesses by eliminating the cost of handling cash within a business. This has proven to be game changing for women. So for example, I'll give you an example here. If a woman business owner receives digital payments and uses those payments to pay to its suppliers, they could use their digital finance transaction history as an alternative source of data to prove credit worthiness, which is very difficult in case of tier 2 and tier 3 cities, because women are unable to get loans for their business due to the lack of credit worthiness, credit history, and lack of collateral that they can provide. So this is especially relevant for women, and fintech startups have this can actually prove to be it can actually prove to show that this is the credit worthiness and this is a credit source for women. Also, fintech startups in India are empowering women and also other unbanked groups. For example, a fintech startup provides low literates with user-friendly digital interface to reduce their reliance on text. Another one resolves the cumbersome text solutions for Kirana stores with the help of voice-based solutions. Several fintech companies also provide banking plus health insurance and savings to provide to people without technical competency or literacy. So unlike banks, fintech companies, through the use of artificial intelligence, can customize and design instruments according to the requirements of the user. So their solutions can actually be completely customized and all focused on the unbanked and underbanked sectors of India. The promotion of micro entrepreneurship through fintech can also further integrate women into the economic cycle. Banks here must be encouraged to explore alternatives to immovable assets as collateral. Given the nature of women-owned businesses, non-conventional source of collateral may include finance, receivables, cash flow, savings accounts, and deposits.
Agrima, sorry, I hate to disrupt you, but thank you very much for this whirlwind of giving us a deep dive into your country's fintech lending scene. We'll come back to you definitely, and I want to hear more about how lending tech is transforming the lives of millions of people in India, especially women. I'd like to switch back to Europe and give Tobias here from Volksbank Berlin the opportunity to give us and shed a light on what you guys are doing, what you're up to, how you view this from a, let's say, traditional banking point of view, and also how you are helping startup founders get access to finance.
Thanks a lot. First of all, I would like to thank ABS for having me in this panel with these great guys all over the world. It's a pleasure to me. For me, today, it's very different because usually I'm sitting on the other side of the table. When I'm in banks, I've always been the tech guy. I'll always put some pressure on technology and said, okay, let's discuss about this topic. So today, for me, I'm sitting on the other side of the table, and I'm now a representative of the old economy, and I hopefully fulfill this as I can. We at Berliner Volksbank, we are a regional institute, and we're very focused on small, larger, but also on startups and companies. And so we're really looking on ourselves as more as a multiplier, and we want to give the opportunity to our clients to work within our network. Our network is the bank, especially, but also our partners. And so we're a little bit similar on some parts, like Finiata with our VR Smart, if you heard about it. And so we also find some digital solutions for the small businesses. But on the other side, if you're looking for bigger businesses, mid-size, great size, but also for founders, it's more complex. In our opinion. And so we're in the, how to say it, classical banking situation. We're trying to provide loans to everybody who is able to pay it. As you already mentioned, if you have enough money, there's no problem for giving you a loan. But on the other side, and this is what's special about us as Founder Center, we have the possibility to provide loans with our partners like IBB, ILB, Bürgschaftsbanken, KfW, and all those institutions to provide loans even to founders or to startups. And so we are really looking for solutions based on business plans. And this is what's special and not, to be honest, not unique, but very special to us. And so we are trying to give solutions for all the stages of a company, from the beginning until they are hopefully big and huge companies, and we all really want to work with them. That's basically it.
Thanks very much, Tobias. We'll definitely come back to your work. And I'd now like to switch to Malaysia, further to the east. Good afternoon, and I hope I pronounce this properly. Selamat petang to you here, Hizam. Please tell us a bit about yourself, and also how in your country, I'm really interested in, again, the financial inclusion topic, but also the P2P lending platforms and what you guys with the government have done to mitigate the impact of the COVID crisis.
Sure. First of all, thank you so much for inviting me. It's a great opportunity to be able to share some of the work done here in Malaysia. Guten Morgen. I'm assuming it's still morning in Deutschland right now, in Berlin. My name is Hizam Kadir, and I work for Malaysia Digital Economy Corporation. It's a government agency that helps to spearhead digital economy, both from the innovation standpoint as well as from adoption standpoint. And in the context of current situations, we're still in the current COVID-19 pandemic. I think it has been highlighted by a lot of the speakers that they are I like to see this from a half glass full point of view. There's the opportunities actually, as you know, COVID-19 has accelerated adoption of digital financial services among Malaysians in general. Malaysia, to give you a bit of a context on where we are in terms of financial inclusion, it's a country that does very well when it comes to bank population. 95% of Malaysians would have some form of bank accounts, yeah? So, and that means that the government has done quite a bit of a good job in terms of creating progressive regulations in allowing Malaysians to be owning deposit accounts for any form of financial transaction. But if you were to peel off the 95% Malaysians that have deposit accounts, there's still a large chunk of Malaysians that are within the underserved community. A report that was done together between MDEC, Securities Commissions, as well as the central banks, found out that there's still a large chunk of the community that have very low financial knowledge. I mean, good example with the current COVID-19, 52% have difficulties in raising 1,000 ringgit, and 1,000 ringgit is about 300 ringgit US, yeah? In emergencies, especially in the current situation. And then there's no clear financial planning, take-up rate of investment platform, take-up rate of life insurance, as an example, in this context. Only 17% of Malaysians have life insurance. So there's no clear financial planning in the future. And most importantly, from future sustainability standpoint, there were some references towards SMEs and micro SMEs, and that's the main focus of us in pushing our financial inclusions initiative. 2/3 of Malaysians work for SMEs, right? And those that are working in SMEs, especially in micro SMEs, 85% of SMEs in Malaysia are micro and nano SMEs. And these guys wouldn't have any form of clear retirement plans. right? They do not have any social security to help them to support their future sustainability. So these are the most severe, most impacted community. And we feel that, in fact, a lot of efforts that are being done in pushing digital technology, in particular fintech, in helping to address Malaysia's financial inclusion, as Malaysia moving towards being a developed market in achieving sustainable growth along with fair and equitable wealth distribution. So to do that, working very closely with fintech companies, as we believe that fintech would then help to enable more opportunities for the micro SMEs, as well as communities that are within the bottom 40 economy, to be able to get access to financial services, and something that the banks or financial institutions may not be able to cater to. As an example, in providing microfinancing for the B40s economy, for the micro SMEs, most of the times, given the fact that these micro SMEs do not have any form of credit histories, and that's difficulties for them to be able to get loans or microfinancing from financial institutions. The ability for fintech companies to be able to validate and verify micro SMEs through different sets of eKYC, using the usage, using data analytics from phone usage or from e-commerce usage patterns, from psychometrics data. So all these data analytics and AI engine are being used in validating the validity of a KYC process of these micro SMEs, in helping for them to be getting micro loans, especially in the current COVID-19 situations, of which the need for them to be getting capital for them to grow bigger. So that's in a snapshot of what we're doing in terms of driving financial inclusion through a strategy of what we call digital SLIP strategy, digital slip strategy, as we're focusing on savings, lending, investments, as well as payment digitally.
I like this very much, Hizam. This will not slip the net, I'm sure. I think, Ingmar, I would be interested, Finiata, do you have, behind your whole organization, company, are you motivated by giving this, including some people who are excluded from getting access to business loans or small loans? I mean, and then as a second part of the question, it's all about data, right? I mean, I'd be interested, could you shed a light a bit on the behavioral data that you're using and how you're using it?
For sure. So I think generally, when it comes to accessing credit and how that is changing currently, there's two big areas in which this is changing, specifically due to technology. And I've been in my talk, and I think also everyone we've heard so far have been talking a lot about who has access to credit, right? And that is very much a question of who can access credit. And this was the core motivator. This was the core reason why we started with Finiata, because we saw a big opportunity in serving credit to a large share of the market, especially within the small business segment, where there's businesses who currently do not have credit, access to credit. And I get to that in a second. The other area, however, is also a super, super interesting discussion, because I believe that technology currently changes also very much how and where credit is accessed. Speaking of 10, 20 years ago, you going to your bank, the small business owner going to their bank, changing to about 10 years ago, they searching online and getting it, acquiring credit and funding online, to now don't even go to dedicated financiers or banks anymore, but the Uber driver accessing credit from Uber, right? Or the Amazon merchant, this is their business, right? Selling on Amazon, on the marketplace, accessing credit from Amazon on that marketplace, integrated, embedded, right? And that is also a super interesting discussion. But I'm not going to get off track. You asked about accessing credit and how we do that, and whether we have the intent of including businesses that have not been included before. For sure, this is driving us. And we deliberately do not include gender as a data point, right, in our credit decisioning. But speaking of biases, we have realized that within the spending patterns of the businesses, for at least sole traders, so those that are individuals, right, conducting their business, that their spend on cosmetics is an indicator of credit default risk. And it actually negatively correlates. So the more you spend into cosmetics, the less likely you're going to default. And yes, so this is something that we take into consideration. And it's just, you know, one example on how you can find information within the vast amount of data that is available nowadays, right? That can yield more higher accuracy in evaluating credit default risk, and as a result of that higher accuracy, you can actually push the border. You can push according to your risk appetite. You can actually push the acceptance threshold, and thereby, in other words, serve customers who have not been served before.
And talking about borders, you've already crossed borders, haven't you, with your business? And I mean, those findings, let's say, aren't they also quite culturally based? I mean, if you go to a different market, you'll find that maybe the cosmetics buyer is exactly the opposite in another country when it comes to the credit risk. I mean, how do you? Obviously, you have a clever system. But
so culture for sure plays an important role. Especially, I think in our observation, it plays even a more important role the more you look at the really small businesses. For instance, for us, 2/3 of our customer base are actually not incorporated businesses, but are sole traders, freelancers, right? So they are individuals. And for them, the cultural component plays an even more important role and has more impact on how they act, how they do business, and thereby also for us, how we can predict the risk that is involved in underwriting a credit for a sole trader.
Right, thank you very much. I think it's time to go back to India, to Agrima, to you there, and please tell us a bit more about you know, the remote onboarding and the kind of what's happening, how this has transformed the lives of many women in India.
So basically, earlier, when the traditional banking system was in place and everybody was only well versed with that, it used to take a lot of time for women or for anybody, in fact, to get loans, to get any kind of loan. So the onboarding process was really lengthy. It was very cumbersome, and it was a process that took somewhere from 7 days to it could even take a week, like 2 weeks. And from that, we have reduced it, like at inVOID, we do these verifications in seconds. So it's a 2-step process essentially. And in those 2-step process, basically, the user gets his verification done. He's onboarded, he's verified. We also take care of all these protocols. The security protocols are taken care of. We ensure that, you know, there is no fraud that is taking place. We ensure that the user is a genuine one. He's an authentic user. And this has enabled women and all underbanked sectors or unbanked sectors to get instant loans. So this has basically given them access. This has given them access to credit. This has given them a feeling of empowerment. This has given them a feeling that they can expand their business, they can manage it, and this has also provided them with a lot of autonomy that was initially missing. Also, there have been other reforms in India, like Digital India reforms and Made in India, which have motivated them to start something of their own and to build their enterprise. And while building the enterprises and starting something of their own, they need those finances. And in the traditional means and the traditional methods, it was very difficult for them to get those finances because of lack of knowledge, lack of access. And as I told you, there was an unconscious bias of the people who were doing their applications. So there was a gender bias that was involved. Now everything is so transparent, everything is so available, so accessible for women and for people. Also the mobile penetration. So there are millions of users who are using mobile and even internet, and it is available. Even 3G and 4G is usually available in tier 2 and tier 3 cities, which has really enabled them to get those kind of credits for their businesses, for their enterprises, for their work, and has helped in building them. So the Prime Minister has come up with lots of new policies to basically encourage women and to encourage all underbanked sectors to work towards this. So for that, we at inVOID, we make it very easy. So in the last quarter, we have basically onboarded so many companies which are MSMEs owned by women. So we provide them with special offers and special discounts where we waive off their integration fee just to encourage them to get onboarded onto our platform. Because we are so much in line with this thought where we want to propagate the women empowerment and the inclusion of women in this country. So I believe that this onboarding solution, coupled with the digital lending platforms that have been introduced in India and the kind of financial literacy that is now going ahead, it has provided to be a good solution for them. But way ahead, I also feel that there should be some niche products that can be introduced, specially focused on women, so that it provides them with more and more accessible credit for them, which is right now missing in our country.
Right, thanks very much, Agrima. And Hisam, is this also of relevance in your country? I mean, financial inclusion of women, because the peer-to-peer lending, I mean, that is open to anyone, isn't it? To those micro businesses.
Yes. Yes.
Definitely, actually. And I did not address the questions earlier that you had with regards to peer-to-peer. Malaysia has been quite progressive in introducing and licensing peer-to-peer platforms in Malaysia, especially in supporting the needs of SMEs, even micro SMEs, as low as, and they are players that are able to provide you opportunities in raising fund as low as 2,000 ringgit. Yeah, and that's just about 500 ringgit US. And that is because the opportunities that these micro SMEs are being able to tap onto the wide connectivity that's currently being made available in Malaysia. More than 80% of Malaysians are covered with broadband, and the smartphone ownerships are right now more than 80% as well. And that's a great opportunity. It's a great tool that would then be able to entice, not really entice, but to increase adoption of solutions that are being offered by digital financial services providers, including the P2P players. The challenges that we see right now are still education. How do we ensure these micro SMEs, and of course, women alike, especially those that are in tier 3, tier 4 markets, they may have access to smartphones, but the usage of smartphones are very much limited to communication as well as entertainment. Making them realize that smartphone that they own, 80% of Malaysians own smartphones right now, are able to do more than just more than just communications and entertainment, right? The ability for smartphones right now in increasing the livelihood and creating betterment of financial availability and access to microfinancing needs to be further heightened. With that, government has done quite a bit of work in terms of educating, and to do that, we are partnering up with telcos mostly in increasing understanding of the usage of various other applications from the fintech companies in order for them to be able to get access to microfinancing. So, and that's happening right now. It has increased opportunities as well as adoption of micro SMEs in getting this alternative and more accessible funding through the usage of their smartphones.
Thanks, Hisam. It seems the future is now, right? If I see that, mobile phone penetration, all the regulatory changes, I mean, that's very, I suppose, forward thinking, and it can only improve further with improvement of networks and mobile technology and so on. And that brings me to you, Tobias, because I'd be interested if you could please shed a light on your engine room, let's say, at the Berliner Volksbank, and maybe give us a your view on the technological change in lending and what's in store in terms of maybe user experience for your users.
Yes. I try to give you just a short overview because for security reasons we're not allowed to tell you anything, but I would like to give you some insights. So we are really focused on user experience these days because we as a traditional bank also experience that our users really need this, and there's a need on the market, and so we're trying to deliver this. And how to get there is, for example, of course, we're changing our online banking. We give them access, as I already mentioned, to our networks partners with We Are Smart. So they have an online tool, especially in the COVID situation, to get money as quick as possible, as you already mentioned. And this was the need, and we fulfilled this with our network. And so we're trying to play the power of our network to all of our customers, but also working on the basics. And so the basics is the website, but in our opinion, it's not only tech, because relationship management is still a very, very big part of our business. And all of our customers give these information also to us. They say, okay, there's an online tool, but in addition, we also need the corporate relationship manager in our businesses. And so, yeah, I think there is no, if you want to have this or that, it's both in our business. And in the machine room, because we're always talking about the risk calculation and all those things, and this is what banks do for years, for more than 10, 20, up to 100 years. And so, yes, it's not only based on data, but it's getting more and more based on data. And so I talk to all these guys, and we're checking how our margins are in which product, and it's always the risk side. On the other hand, refinance is also a big part, but also the risk side, which makes the whole interest rate. And so we're used to it. We're now getting it more into data. But to be honest, we have a huge track record on this, and now we're getting more and more into use it, and it's getting better. So
thanks very much for shedding light there, and I'd be intrigued to hear, are there any fintechs that you come across that may need a loan or something that you think, wow, their solution could be interesting? Are you then making perhaps occasionally internal introductions that say, speak to our, I don't know, this or that department where they could be
for sure. We're in Berlin, so all these great guys are here, and I'm really into this ecosystem. And we as Berliner Volksbank has also the opportunity to invest in companies. We are on the loan side, this is one part, but also on the investment part, because we have a venture department, which is VR Ventures, which used to be BVB Ventures, Berliner Volksbank Ventures, but is now VR Ventures for whole Germany, for all the Volksbanken and Raiffeisenbanken. And they're really looking for fintechs, corporations, they're really, or investments, even investments, and also prop tech, and but also besides. But so we're trying not to only see it from the side, we really want to dive deeper into it. And so I've made by myself, and this is so my only thing, my personal thing, I made some introductions, and yeah, we're discussing with interesting companies, and we're open-minded, and I think that's also a very changing and traditional banking, because we're not more like, okay, let's fight each other. It's more like cooperational style. So we're getting back to this network thing, which I already mentioned, and we are trying to find the best of both sides to deliver the customer needs. And that's basically what we do.
Very interesting. I think since we are talking a bit about the future, I'd be interested, and I tell you what I saw. I saw in the Frankfurter Allgemeine Zeitung recently, and this one for you, Ingmar, an article here about one of the fewer stock-listed German fintechs called Credit Shelf, and it's obviously a credit platform here, and they say that their business is increased 80%. Compared to the quarter last year, so we are talking about the second quarter. So they have very good results because they're obviously there seems to be an increased demand. Is this something that you are seeing? I mean, you spoke in your curve there about how you have brought down the, let's say, the failure rate, or but are you also seeing an increase in demand?
Yeah, we for sure see that, and I think that actually, I mean, our intuition was also that it's going to develop that way. We were, of course, before March, right? We were, or in March really, we weren't fully sure, how our loan book is going to develop, and we are now very happy to have realized that it remains super stable within these times, which is another proof point for us. But it's also, so that is the risk dimension, but then there's surely the demand dimension, which we saw increased, but also we saw credit supply due to constrained risk policies of banks in these times, creating a market pressure really that was that we saw in our funnel. So yeah, increased demand, but also very much decreased and contracted supply, which increased the pressure for financing to small businesses. And I'm specifically speaking there about our segment and the Polish market.
And for Finiata, apart from surviving the crisis like we all want to and desire to, what's the main goal in, let's say, the next 2-3 years for the business?
So the main goal for us is further penetrate the Polish market, because the ceiling is a lot higher than we have currently reached. Secondly, expansion into other similar markets. We're looking actually into Southern Europe as well as other CEE countries. And a third pillar would be for us to try to better tackle the working capital problem, the outside of credit solutions, because yes, we want to democratize credit, we want to drive and include more and make it accessible by more, but it is very clear that there is still a large amount of businesses that will not and also should not afford a certain amount of credit, right? And it also is our responsibility to ascertain which business is not able to afford a credit and also not in a predatory way issue a credit to such a business. But in our belief, there are other options in which we can leverage what we have, leverage the data still, leverage the intelligence that we have built, the models that we have built, and expose them to the businesses in helping them improve their ability to manage working capital. Because it's not only a problem of access, it is also that these small businesses usually have a high expertise on their own specific business. So the butcher knowing how to handle his meat, the bakery knowing to bake their rolls, but they are not experts in liquidity management and financial planning. On the opposite. And this is where we believe that technology solutions, and specifically also the intelligence that we have built, which underlies our credit model currently, can also be used to help them and manage their working capital. So we're working on that. These are like the main priorities for us. I really like what you just said, because I wanted to actually ask you that. How you see whether you rather see like banks and us in a symbiosis, I don't know, 10, 15 years into the future, or whether you actually see, in more
competitive.
Yeah, in a more competitive mode. And you were talking about, we're building risk models and so on, but then you went on, well, we do investments, we look at startups, and you were mentioning also something else, which is that, there is also a relationship component, right? And I think banks have always done that quite well. And there is certainly the funding component. If banks can do something well, then is efficiently acquire capital, right? And I think that both are areas where we have not had our utter focus on. And I also believe that if we don't apply the ego, right, of having to own the customer relationship and having to build our own loan book with our own acquired capital, and rather focus on the real problem, which is access to working capital, using our machine learning intelligence, right? And serve that to empower others, and others can then also be banks, right? But could also be a marketplace, could also be a ride-sharing company to enable and to then serve the credit to the small businesses. That is something that is a more symbiotic arrangement that I would love to see, actually.
So I can just answer it very quick because I feel some pressure from this side. I can just tell you in my personal opinion. In my personal opinion, we're going in this direction because we see a lot of marketplaces, as you already mentioned, like Amazon or all the others, trying to get into the financial system, you know, giving them loans in a very quick way, in a very efficient way, as well as you do. So in my personal opinion, it has to go in this direction to work together and to especially highlight the needs of the customer. And it doesn't matter where it comes from, as long as you have the customer by your side from the banking perspective. So we want to deliver excellent services to play a role in the future. And so this is basically what's my belief. I would say, to get back to your question, in 10 years we will see more models like marketplaces, like sharing all the institutions behind it, and it's not more like I have to give you every product from my side. I have the possibility to give you the opportunity to get to all these products from my partners into the ecosystem, and that's basically what's my thoughts and where the direction is going.
Gosh, this is becoming like a love-in between the bricks and mortars established and the fintechs. I like it. I think disruption is really a word of the past, and I think the future is cooperation. That I firmly believe. And talking about cooperation, I think I want to spend the last couple of minutes on asking all of you guys, ladies and gentlemen, to maybe talk a bit about cooperation. I mean, what can we learn from each other? How can we cooperate? And let me start with Hisam. I mean, are there, because you are, in this position where you have, I suppose, the eagle's view of your industry, is there an appetite of Malaysian fintechs to expand abroad? And if so, where are they going to? Are they coming to Europe? Because here we are, Berlin meets Asia, Asia meets Berlin. Is that happening?
Yeah, well, it is happening actually, but of course, Malaysia being a developing market, and a lot of fintech companies that have come to Malaysia, including some German companies as well, are using Malaysia as a test bed before they expand across Southeast Asia. Malaysia has that opportunities to, for companies, for startup companies to be able to test bed their solutions. And partly because of the friendliness of the regulatory, government's interventions and policies as well, in providing opportunities for technology companies to set up presence in Malaysia. Malaysia is a country that allows 100% foreign ownerships. So that's a great example of how we welcome foreign companies that wants to set up presence in Malaysia as part of their...
Now we lost you there. If he's not coming back at the moment, let's switch to Agrima. I mean, what's your view? What's the do you see
growth stage?
He's back.
Stage may be a bit too early for them to get into to Europe, but there are companies that are already moving towards. May not necessarily be fintech companies as yet, but getting into Europe in terms of the expansion. But I would love to continue having these conversations in looking at how we would be able to welcome more Berlin companies or German companies into Malaysia, at the same time providing opportunities for Malaysian companies or Southeast Asian companies to enter Berlin, Germany and Europe as well.
I'm sure Dr. Seider and the team will be pleased to hear this. Thank you. And Agrima, what do you see? I mean, is there, your company inVOID or other companies in the industry, I mean, are they expanding abroad and are they looking at Europe?
Yes, definitely. Even we are expanding abroad. So we are already working with a few companies in Southeast Asia. We're also expanding to Bangladesh and other Asian countries. And we've partnered with another company who provides our solutions in Europe, also in Ireland. So we are really looking forward to it. And we've already partnered with many such companies, and even in the near future, our plan is to scale to other countries in the world. And even other companies from the globe, especially Europe, have entered the Indian market, especially in the onboarding domain, and they're also well established here. So it's a very two-way street. We are also planning to work there, and we have already kind of started working there and integrating with them for our solutions, and they are also doing the same thing. So I believe that the cooperation is very well and very synchronized in both the countries and parts of the world, especially in terms of verification industry. Yes.
Thank you, Agrima. I think we have 2.5 minutes left. Tobias, what's your view? I mean, do you have maybe a certain percentage of obviously foreign founders that you're supporting, I guess? And do you see more and more Asian people from Asia coming to Berlin to do what they're doing?
It depends. So I'm just a small part of the whole market, and we see some guys from Asia, but to be honest, it's basically focused on Germany. Especially in Berlin, we have a diverse client base, and they're coming from all over the world. So I would not say if it's only Asia or American or British or whatever, they're coming from all over the world. We have a special center just focused on foreign clients, and so we're very open to it to work with everybody in the world. Because I think in Berlin, diversity is 100% lived, and so yeah, that's basically our user base because we are a Berlin-based bank. So that's my view.
Thank you. And Ingmar, what I mean, any future plans perhaps to go to Asia? What's your take on it?
We have very strong growth ambitions, but one must also say that lending is default local, right? It's not like you're setting up an e-commerce business and then can within the EU, for instance, scale by just translating your landing page. It doesn't work like that. We talked about cultural differences. The amount of partnerships involved in putting up a lending business are severe, and thereby the investments needed to enter a market are very high, and thereby, especially being an early stage startup, you really want to focus. So this is also why we are focusing on the Polish market now, and then individual other markets within the EU, maybe Turkey, thinking about that, and then after that, yeah, I mean, the sky's the limit.
Excellent. Lots of challenges, lots of opportunities. We could allow one question from the floor, if there are any. In case not, I'd wrap this session up by thanking the panelists very much for their contributions. I think we had a fascinating overview of East meets West, of what is happening in Asia in terms of how lending technology is transforming the lives of millions of people. And I would close by using Her Majesty Queen Elizabeth's quote, "We will meet again, we shall meet again," and this is the promise. Hopefully, guys, you will join us personally next year here in Berlin. Thank you very much.
Thanks, Thorsten. Always a pleasure.
Thanks for having us.
Thanks for having us.